Today is the day that CPI data is going to be released. Now, what is CPI data first thing? CPI data is going to be our inflation data, Consumer Price Index. Inflation has been an issue in the United States. Things are getting so expensive that the average person can't keep up with it. Gas prices are expensive. Groceries are expensive. This is expensive. That is expensive. And it's very tough to be able to survive. So, as the government, as the Federal Reserve, what have they been doing? They have been raising interest rates to try to slow down spending to make inflation come back down towards its normal prices so everyone can be able to be a happy American. That's essentially what the whole idea here is. But speaking of CPI data, our Consumer Price Index, we are about to get the report on how high inflation either climbed or how low inflation fell over the month of October. We are in November now, but we are getting the report from last month because now that the month is over, we can see where inflation has been. In 24 minutes, when this CPI data comes on out, we are either going to see a massive spike or we are going to see a massive dump. Let's take a look at the last CPI data report we had. This is what we saw. This was on October 13th. And this was actually one of the biggest green days of all of 2022. When we first came out with our CPI data, we saw a huge collapse. This collapse, traders, was all the way from the price of around 362 and fell all the way down towards around 348. We fell about $14. Crazy, right? And then throughout the entire day, we spiked up about $20, where we went from 348 and we ran all the way up to 368. If we actually take a look over on this chart, can you guys see where that massive green candle was? It was actually at the lowest point of the year that we hit, right here. That massive green candle was the last time we came out with these reports. Because let's say it's a bad report. What are our estimates? Where do you think we would fall down to if we have a bad report? A bad report would be if inflation is still climbing. Let's say that inflation is still rising up. That wouldn't even make any sense. We're raising interest rates and inflation is still rising. If that happens, the market's going to tank. If inflation hasn't been taken care of at all, what do you guys think is going to happen? People are going to say to themselves, oh wow, we're going to have more interest rates on the way. We still haven't brought down inflation, which is going to make people say the market's going to dump. Now let's say all of a sudden we get this inflation report and everyone is sky high, over the moon, super happy, and they say, hey, we have fought inflation and it is coming on down and it's working and interest rates are working, and now maybe again we're going to start easing off interest rates. Then people will be excited and people will be happy. Last time though, it was a little confusing. So many people started shorting the S&P 500. We came out with bad inflation data last time and the market crashed. But then at the start of the day, it just started to rise. We started to get a lot of activity. We started seeing a lot of movement towards the upside here. We want to continue to keep our eyes peeled on the S&P 500 throughout the entire morning. It's not if just we come out with bad data, we short all day. Last time we came out with bad data, we actually had a massive drop, but then a $20 climb. But what are we looking for? We have CNBC. It says stock futures inch slightly higher as investors watch midterm results, await inflation data. So, stock futures inched higher on Thursday as investors awaited new inflation data and eyed U.S. election results. Futures connected to the Dow Jones Industrial Average rose 28 points or 0.1%. The S&P 500 futures added 0.1%, while NASDAQ 100 futures gained 0.2%. It follows a day of losses, with the Dow dropping 646 points or 1.95%. The NASDAQ Composite and S&P 500 shed nearly 2.5% and about 2.1% respectively. The declines came amid uncertainty stemming from the U.S. midterm elections. The market had hoped Republicans would take sweeping control of the House and Representatives and the Senate on Tuesday, a situation that would create gridlock in Washington, D.C. Key state races in Arizona, Georgia, and Nevada remain tightly contested. Instead, the Senate race between Raphael Warnock and Democratic incumbent Herschel Walker will head to December runoff. What you're reading here is when Republicans have control, the stock market usually rises. If there is a split between Congress with Republicans, Democrats, that's the best case scenario. The worst case scenario for stock investing is when Democrats have full control. Democrats and the Democratic Party has a lot more tax implications. One of the big things about a Democratic Party is they believe that you should be taxed based off how much you make. So think about this. Every single person is taxed $5,000. That's what more is Republican. Democrats would say, oh, well, you make $10 million a year. You should be taxed $100,000. So why would Wall Street not like this? Do you think they want to pay more money to the government? The answer is no. So based off history, based off stats, when Democrats have more control of Congress, we see the market fall on down because it's more of just like a little negative that, Wall Street's saying, oh, we're going to have to pay more taxes. When Republicans have it, they get more excited as they're not expecting as many taxes. Remember, this is not my political views. These are, again, straight facts right here. That's why I'm speaking at it. So please don't send me an email later saying how I hate Democrats, because that's just not true. Now, what else do we need to be aware of? October CPI report is going to be coming out in 15 minutes. So far, we've done 6 rate hikes to slow down spending. If we're continuously raising interest rates, and we're still not seeing inflation fall, we may go up a whole percentage point, another percentage point, another percentage point, another percentage point. If we see inflation fall on down, that's great. If we're seeing that inflation is rising on up, that's really, really bad. It's going to be a crazy, crazy start on this day. We have the S&P 500 coming off a very big red day yesterday where we saw about a 2% drop. And if this inflation data is bad, we are probably going to see a very big drop. I would say somewhere back on down towards the 360 region. Today is a day, traders. If you are on the right side of momentum, you can be able to double, triple, quadruple your account. Last time we did this, it moved $20. So whatever you usually make, multiply that by 20. And that's what you could potentially be making today. Let's have some fun. Let's get ready to make some money, and let's dive right on in. If you guys are pumped for today, hey, take a second, smash this thumbs up over on YouTube. I really appreciate it if you guys can. So for anyone that's not liked or not subscribed, make sure you guys subscribe right now. All right, thank you so much. Hit that thumbs up, okay? I like to ask politely one time, and then I start getting a little angry. Hit the thumbs up, people! So simple. Sorry. Sorry, okay? Ladies and gentlemen, S&P 500. We just went on a $12 spike, but we have a very important question to ask you. Is this going to hold, or are we going to come crashing on down? Last time we had this, it was the complete opposite. Last time, a massive dump in pre-market, everyone started shorting this, and then it went on a $20 spike during the day. Last time we came out with data, the data stated that we had bad inflation. It had the morning dump. But then guess what happened? Throughout the entire day, it spiked up $20. So it could right now be potentially a flip of last time, where we went from 348 and spiked all the way up to 368. It was a $20 climb. Could today be such a big gap up that traders are going to sell it on off, that we're going to lead towards a drop? Let's head on over to CNBC.com. Consumer price rose 0.4% in October, less than expected, as inflation starts to ease. What we have right here is we are being less than expected. So are things still rising? It's like we're still rising, but less than expected. People are seeing this as positive, less than expected. The S&P 500 is on a $11 spike at this moment, and it might be getting a little bit too high. Yes, we beat expectations, but the expectations, this is still an overreaction. Let it rise. I would like to see the S&P 500 go all the way up to 390, 391, 392, 393, and then we could look for a short. Do a put contract, back on down, and see if it can start fading and start getting weaker. I'm looking to do the reversal. That's what I would like to do. But S&P 500 has been on fire so far. We are obviously seeing a very nice move, very nice rip, and a very nice run. And this is all from that CPI data, which has been absolutely insane. But I do think it's going to start fading and falling after this. This is where stock trading becomes predictable, because we can wait for that perfect play. We can put the odds in our favor. Let's just play the uptrend right now. So here comes the S&P 500. Are we going to get this crack here? I am going to wait until we are clearly moving down. So we definitely are starting to crack. We're definitely starting to look weaker. I still want to nail the short. I think the main short is going to happen closer to like 393 to 394 for a clear crack underneath that uptrend. Underneath that uptrend, we can go ahead and look for a short. We should be able to see momentum start shifting. Notice what we have, team, is this the first true crack here. I'm going to look for one entry Just one contract right now, just got filled on one contract. If we just keep on going, I'll look to add if it pops back on up. Here's a nice crack so far, already getting a little bit of a dump, already getting a little bit weaker. I'm gonna add another contract. I'm gonna add 2 contracts. I'm going 2 contracts at this time, looking for it to be able to fade and drop. Looks like 391's about to crack here, and we do have a perfect trend line at this moment. So we're down towards around 391. Let's see if we can crack 391 and keep on falling even more. I can still be able to get another contract if I would like. We do have room to fall back on down towards around 390.50. There's a nice little crack. Good job. Currently up $207. Where would you add another possible contract? Probably up near around like 391.50. Guys, I'm going to add one more contract. I like the crack of the trend line. These contracts are only costing like $1,200 at this time, so they are very, very cheap. I actually can afford, I think, one final one. 4.5% move to the upside. Crack the trend line that has been holding the entire day. I think, we're absolutely fine here. All I want to see is that nice hard red candle. We've stayed patient for the first 2.5 hours of the day. We waited for a clear-cut trend line crack. And in my eyes, this should turn into a bloodbath. In my eyes, this should get ugly quick. In my eyes, I see this thing coming all the way back down to 390 or lower. I will be holding this. I will be sitting on this play. I do not plan on exiting anytime soon. I think we're going to spike on up a little bit higher. I think we're going to hit a downtrend area, and my stop loss where I will get out of my play is if we run back up towards 392.
A few moments later.
I take a step out for a second and I come back. We're up. Tell me something I don't know. Oh yeah, this trade was going to work out? Yeah, tell me something I don't know. We're currently up $1,600 on this trade. You want to, again, jump in on these trades. We follow the chart patterns to a T. I like to think of stock trading as making sweet, delicate love. I always like to make sure that the S&P is on top of me, and then I get on top of the S&P 500. Just absolutely caressing her. Everyone's making love with each other right now. This is what we're doing here on TradeCaster.com. Everyone, come on, be with me. Let's all make love with each other. Come on. Whoa! This is a family-oriented show.
And now back to your regularly scheduled program.
Currently up $1,800 right now. Let's even get that dump underneath 390. Do I look shocked? No, I don't. You know why? Because we're rich. We don't have to be nervous at all. We keep it together. Traders, look at this play drop. Look at this thing fade. Look at this fall. Look at this continuously get weaker now. Let's see how much lower we're going down towards. Let it keep coming down. Let it keep dropping. Currently up $2,300 now. S&P 500, nice little dump. I'm gonna actually lock in one contract so far. Locking in one contract. I have 2 contracts left at this moment. Let's let it keep going. We already locked in a little bit. We already locked in $807. Let's see if we can go on down towards 389.75. There's 389.71, 389.71, 389.60. Very nice to see. I'm going to lock in one more contract. Locking in one more contract. Just click the sell button. Currently up $1,600 at this time. Still dropping. Locking in this last little bit. Locking it in here. And boom. Let's go! Ah! Finished profit on the day is $2,453. That is what I am talking about, baby. Here are again my entries and exits on that play. $2,453 in profit.